Hello, Costa viewers. Welcome to Eyes Open FX. I'm Ezra. In this video, I'll be explaining some details about model in price. So, this idea of model is understanding how you trade structure, how you trade markets, and inducement. Right. So, trading just structure and inducement. Sometimes market can take you unaware. You can't even understand when market will continue the bullish movement or when market will continue the bearish movement. So whenever you are being trapped in this situation, now you start doubting your strategy. So the main idea is understanding what market is doing at this particular time in terms of model. Now when you understand the model, this will help you to read market differently, understand structure differently. This will even help you, even before market breaks structure, you will understand that market will break structure, not just trading based on expecting market to break structure or not. Right. So this is what we call a market model. Now I'll be showing. We have up to phase 1, phase 2, phase 3, and phase 4 feet. I'll be sharing phase 1 here on my YouTube channel. So do well to listen to the video to the very end. Now, the idea of this model is first understanding what we call momentum. That is kind of now let's give an instance. A car, let's say for example this is a car, and we have a filling station, that is a fuel station here, another fuel station here, another fuel station here, then another fuel station here, and we have a mechanic where you can actually change your oil, your water level, and maybe service your engine or your car at this area. So these are service areas or mechanic shop. So now as you are moving from this place, driving to your filling station to buy fuel. After buying fuel at this area, at least the car will regain strength at this area, then start running with a full momentum. This area is what we call momentum move. Now this area, if you understand the model well and understand how market works, you will understand that this area, what you trade in terms of price, is what we call range structure. At this area, you will expect market to form range structure. So you join the idea or the mentality of range structure is that range structure is used to join trend. When you know that market is about to give an explosive move to the either to the downside or to the upside, you trade range structure at that time until market goes into either a pullback or a consolidation. Now what we call consolidation? Consolidation is the fuel station. Consolidation is the fuel station. While pullbacks are the mechanic workshop. So this is the idea, and this straight line is the momentum area. So this area are the areas you trade range structure. Now if you can't catch this move within this range structure, then you can catch it either at this mechanic shop or at this filling station. So you can join them before they start running, or join them as they are even running with range structure. This is the idea of the model. So whenever market is trapped within a range, or as market gets into this filling station, there's what we call a balance move at this area. So as market now get into this area, as the car get to this area, people that selling the fuel and the car, they will go into agreement. So if the man agree with them, they will waste more time. Why? Because he will buy fuel. But if he didn't agree with the fuel price, he will leave instantly. Do you understand? as he leaves, likely market can actually either get broke, market will break down here by not having fuel at all. So as a good, that means there is another consolidation that will play a role here. So these other parts are what this model will help you. Now we go to the model in detail. So in terms of understanding the model, the first thing we deal is what? Understanding what we call a consolidation, understand what we call a pullback, understand what we call a momentum. These are the three things you have to understand this trading model. So we'll be, just like I said earlier, I'll be treating one phase of that model. Now, whenever you see a market trapped within a range, how do you know that market is trapped within a range? Now, the first thing is that you notice market broke this high. Now, it created a higher high right here, a higher low, a higher high, a lower low, which is this, and created a new higher high. So market is trapped within this range. So this is what we call a consolidation. So as market is trapped within this range, market will give us, in terms of the model, is that after every consolidation, a reconsolidation, after every consolidation, we have what we call a little manipulation above it. This little manipulation that is above it, it can be few pips above this original consolidation, can be sometimes a little bit above it, a little, then break structure down. The main manipulation, since we're having this consolidation right here, the main manipulation do happens to the downside, all right, for bullish continuation or bullish order flow. So the main manipulation will happen to the downside. This will become our low risk sell area. So after this, before we expect what? A reversal model to happen around this area for a buy, for us to expect what? A buy and market, for us to expect market to now read this former high. All right, so that is the idea of the model. The first thing is that we have what? A consolidation, a break of structure to the downside by breaking this low, then a low risk sell, which is this, then a reversal model right here, which is in form of range structure. Market can form a reversal model or another consolidation just like this. These are the two things that market can actually do at this area. So it can either form this reversal model is range structure. It will form in form of range structure, lower low, lower high, lower low, lower high, lower low. As it break this, it become your intent. You enter at this area, targeting this extreme high as your TP, by first understanding the order flow of that pair. Right, so this is the Christmas sauce that I'll be giving this year. All right, so this is a clean method on how to understand a trading model. All right, so now looking at it here, this is the model, the consolidation. You have it here, a lower time frame reversal, which one can actually catch even if you don't have a POI at this area. You can understand that this is what? Earlier consolidation right here. After understand that this is a consolidation right here, then lower time frame, you see what? Either market will give you a clear idea of stop hunt by stop hunting this high with either a body or wick without forming any range structure at all, then breaking structure to the upside, which is this low, to the opposite side. So as market now break this low, some people can actually take their first entry here in this cell, their first entry here, if they understand this type of model that market formed above this high. So after taking this first entry, the next thing you expect is what? For market to break this low. After breaking this low, you will now expect market to form this as what? Your low risk sell movement. So after this move right here, then you trade range structure for market to create a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, then a lower low, a higher high, a break of structure. As market now break that range structure BMS, that becomes your what? Your intent. After intent, you wait for what? Minor break structure, which is this at this area. So after market give you your minor break structure, then you can expect what? More buy move to the upside for market to target your nearest external structure range. So this is that on this model. Now within this coming month, which is that is 2023, I will be sharing some little idea on this part of specifically this model I'm talking about. I will share a little light more on it. That is that, and with our outlook, we will continue next year. And that is all for this year. Merry Christmas and Happy New Year to you all. Good luck, good trading. See you guys in this coming year.